and we're live in New York City. The founder and principal of the firm, Rob Beardsley, and of course, myself, Craig McGrouther, the Director of Business Development, here today on a Friday doing a nice little recording. How are you?
Well, to be honest with you, I'm pretty underslept and stressed out, so actually not having the greatest day.
Yeah, well, that'll be a motif that I don't foresee getting better in the foreseeable future, but there will be light at the end of the tunnel, of course. But before we get into the show, we got to do some shout outs and call outs real quick. A little housekeeping. Number one, we've got our conference coming up in New York City, September 15th and 16th. If you are a capital allocator or a sponsor or a investor looking to meet great sponsors, meet our team, Lone Star Capital, and just really get the best and brightest of, brain share, mind share, thoughts and conversations in the commercial real estate world. This is one of the most premier events. And I'll also say this as well. One thing about our event that is very special and unique is the fact that real equity actually goes to these events. After just being at IMN, Rhode Island, and Dana Point, it's a lot of rogue equity. It's a lot of people that say they're, capital this, capital that, and then they're really just like, capital advisors or equity brokers, which is fine. But if you want to meet the source and meet legitimate co-GPs, fund managers, capital allocators, the whole nine, come to our event if you're a sponsor. And if you're an equity provider, capital allocator looking to meet vetted sponsors who we approve, who we go through that we think are deemed reputable, they will be at this event, so you don't want to miss it. So really recommend everyone go. It's going to be a top-notch event in the One World Trade Center. The whole nine is going to be set up. We're very excited about this. Will be the 4th edition, so we've worked out some of the kinks to deliver the best version of this conference yet. Additionally, Grand Riviera, due to lender reasons, I believe, which if you can get into, feel free to share. But we are delaying that closing, I believe, until late August. I think we're about, when this will air, about 90% committed on.
Pretty much full, to be honest.
We're very close. We've said that before. It didn't work out in the past.
Obviously, don't want to jinx.
Don't want to jinx anything, but we're pretty close to being fully subscribed. So, but there is still a chance, and that's not meaning that we've collected every single dollar for this deal yet. So if you are looking to invest, it is first come, first serve. With that said, if you'd like to work with us on that deal, or if you'd like to learn more about what we've got around the corner of that deal, because we do have a pretty robust pipeline, of course, reach out to myself, the email, but once more, just Craig, C-R-A-I-G, at lscre.com. Once more, Craig at lscre.com, and I look forward to connecting with you then. Okay, that was a mouthful, but we're here. So
you want to start with where you just were and kind of unpack that a bit more, because we haven't even had the chance to talk, so I'd be curious just to learn more about the events you were at. Were they cheap events to go to? Were they expensive? Were the hotels nice? What were the activities?
Yeah.
Obviously, at the end of the day, most importantly, was it valuable?
Yeah, well, I think the only thing that's valuable to me is I could sleep on the floor. I could sleep outside. If I'm meeting capital or a new investor or someone we can do business with, that is very, very productive to me. So the last 2 weeks, as opposed to on the LinkedIn, for those who I'm connected with on LinkedIn, if you haven't connected with Rob and I, please add us on LinkedIn. We'd love to connect with you there, share thoughts, of course. But last week I was at IMN, Dana Point, and then this week I just got back from legitimately off the plane. I still have.
Oh, you flew?
I flew, yeah.
Oh, I thought you took a train.
No, I flew, yeah. There's
nice.
no easy way to do it. I'll probably train back perhaps next year, but nonetheless, I flew from Rhode Island to Newark cab to here. So was there earlier today, and I think I had a couple better contacts that are net new to Lone Star at Dana Point, but I felt I really enriched a couple relationships more at Rhode Island with a couple of people that we've raised capital from before. So it was really cool to be around that. But I will say, these conferences, more and more, I'm starting to realize that not a single person has one original thought, unfortunately. It's everyone just kind of saying the same stuff. Very few people are going out on a limb doing anything crazy, and it really is a similar crowd of people. These are two of the more high-end conferences that IMN does put on, but these conferences do not hold a light to the number one conference that IMN does, which is IMN in Laguna Beach, which is in January. It's like basically you go to Laguna Beach, IMN, or you go to NMHC, or if you're a sicko like me, you go to both. But of course, these events were okay. So at the Dana Point event, it was really fun, and Rhode Island is really fun too, because it's nice when the conference is done, or a little bit before. You're in a beautiful setting. Do I think I'll go to these both next year? I don't know yet. But I thought it was interesting that on the attendee list, because you go through IMN before, you try to set up meetings, because that is the valuable nature to these events is meeting. It's not the content. No one's saying anything original. There's no takes that I really care to hear. Just doesn't really relate to me. Not to sound arrogant, but I just don't care. I'm not there for that. I'm there for people, human capital, and putting equity into our deals, right? And there was a bunch of people that signed up to go that ended up not attending, which is a bit of a bummer. Like some very reputable big shops, true equity sources that were there that did not end up going. So that was a bit of a bummer. The other thing that was kind of interesting is that from several groups we said, maybe I just present so well because I'm so good at my job, but I think it's really an umbrella of who we are as a team, that we were like the most legit sponsor that they met with, which is cool to hear and very flattering, but I also want to be in the room where I'm the lowest and we're the lowest, and we have so much
Correct.
to gain from being in the room. So there's no value in kind of training with or sparring with people that are, I guess, like a little less than you. I don't really have this ego where I feel like I always want to win.
There's no benefit to being the smartest in the room.
Exactly.
Ever.
Yeah, it's never fun like that. I want to be, the most to learn, the most to gain, selfishly, of course. And I felt as if that was kind of tough there. There's also kind of a new caveat, a new thing that I'm learning about, which is capital advisors. Well, what's a capital advisor? It's basically now the sophisticated way of saying an equity broker, which is fine if that's your business. We work with the debt broker, Nate Lowy. He's our boy. We love him. He's our, only debt provider. But now there's these people that are equity brokers that are, apparently for a fee, they'll raise all the debt and equity for you, allegedly. So I found that to be kind of interesting that, they're, coming off and kind of positioning themselves as JV equity or an institutional equity when in fact they may or may not have, these relationships with them.
Yeah, the reason why equity brokers get a bad rap, because if they do a good job, there's nothing wrong, right? But the reason why they get a bad rap is, like you said, either they posture themselves as not being a broker and they kind of make themselves out to be, oh yeah, well, we're an equity source, we're an equity provider. Well, are you an equity provider or actually an intermediary? And they kind of try to get you in the door by saying, well, we have this and we have access to that, right? And then the other thing that they do that people don't like is the old bait and switch, where they'll get you in the door and say, hey, I can raise equity for you on this deal, I can source you a single check. And then they don't, but then they say, okay, but now I can source the debt for you, right?
Or in 2023 and 2024, okay, well, would you take pref?
For sure. That's another bait and switch.
Or mezz.
Hey,
yeah.
I went out to my list of investors. No one was interested in giving you JV, but I have a couple groups ready to do some aggressive pref for you. It's like, well, aggressive for who?
Yeah.
So that's a funny one. But yeah, it's important to know who the good equity brokers are, build a relationship. And that's the thing. At the end of the day, why do we do this podcast? Why do we go to events? Why do we, do all the things that we
spend literally thousands of dollars? Yeah.
It's for relationships.
Yeah.
So to think that you could simply hire an equity broker to circumvent that process and just magically provide relationships to you, it's just not how it works. At the end of the day, an equity broker can be useful, but if you don't end up being of the quality and have the skills to build a relationship with that end equity provider, it's not going to work out.
Yeah. So I will say though, there was, at IMN Rhode Island, these are relationships that we've had, but Flagship Capital, who's a very legit equity source from Houston, of course, we've done deals with them. JUC obviously is on this podcast. I got an awesome lunch with Garrett, who's great. The Flagship team is great. They give you great feedback every single time. They'll actually tell you if they're looking at the deal, if they're interested, if they're not. And then I also got to connect with Kyle Barnes with Realty Mogul. Great guy. Hopefully we can have him on the podcast at some point soon. And those guys are awesome. So those are as legit as it gets. I don't know if it's a good news or bad news thing, but we're already in, cahoots with them. We're already friends with them. Like, right. We share deal flow. We're always in contact. We want to do as many deals as we can with both of them. So I didn't necessarily find any group above and beyond that. One contact that I'll share a deal with is to see where it goes. That went through some meetings, and I obviously enriched myself a good amount by learning this more. And unfortunately, you have to learn the hard way sometimes. And then, Dana Point met a really interesting contact that I think will be a very good capital source for the foreseeable future. And we might actually work with them on Grand Riviera as well for a little sliver they want to try us out for, which is super sweet. So if we get something that quickly, it'll be worth the fee and price of admission for both of them, in my opinion.
And like JC's boss, David Mintzberg, says, he's like, hey boss, should I go to this event? Well, I can guarantee you one thing. You won't meet anyone if you don't go, right? So that's the thing about events and just putting yourself out there. Is you never know. It could be a waste of time or it could be the best of times. So I remember at the beginning of this year, before 2024 started, you and I mapped out 2024, and we said, okay, here's a list of events. Some of them we know are a lock. It's a must go, and we're going to get a lot of value. Other ones, we've never been before, we don't know, but let's just 2024 was the year of trying it out for us. And then obviously whatever worked, we'll double down on. And I don't think we need to go to every event. So if it doesn't feel like a value to us, then we don't need to do it.
Yeah, and also it's not just opportunity costs. And I look at this firm and how we spend money as it's my dollars leaving. So I have an internal clock and urgency at anything I do, whether it be on the typical working hours, which are blurred these days because we're all so busy, whether it be a conference, whatever it may be. I look at everything as, okay, is this net productive? Is this better than me being in the office, taking care of email work, spearheading projects, thinking about ways to grow the business? Is it better than doing that? And if you meet a contact at something that pays you out, that you do deals with, it is always worth going to the conference for. You got to pay to play. The best are there. They're looking to do deals. If someone's new and whatnot, you'd hate to be the person not there. And also, I'm a little bit neurotic. The thought of anyone passing me up or passing the firm up, if you will, because I look at me as in the firm, almost, so to speak, it's synonymous with one another, right? I would feel very upset if someone got that little micro edge over me where I could have had that, just a little share, that little nugget, maybe that slight crack of a door that's open that we just ran through and burst through and got some equity or got some new relationships. So that's how I view the world. Perhaps it's from my zero-sum game residential real estate business. I don't know, but that's kind of how I look at kind of events. But I did find that to be interesting. But one thing I also have been doing is asking people a lot of questions. So if I meet people, I kind of want to flip it around where I'm not just word vomiting the whole time. I want to sit back and say, what do you do? And I kind of learned pretty quickly that, oh, there's a lot of these capital advisors here. So before I kind of go into my spiel, I want to see if they're, actually deploying capital, or if they're, capital advisors, if you will, right? So I flipped it around. But one thing I did ask, even some of the more legit sponsors that were there, were, hey, what conferences are you going to as well? So I got some good leads as to other outside events outside of IMN that are potentially productive, that I'll look into, to your point, that will maybe change how we look at conferences throughout the year, and what I'll do kind of moving forward.
Yeah, that's a good plan. Obviously, we don't know what we don't know. So every year, I think there's room for exploring, and let's try to do a new conference at least every year, and then obviously change over time.
Yeah, and then so just from a kind of down the pike, as they say, on conferences that I'll go to close out the year, it looks like we've got our event of obviously in September 15th and 16th. Get your tickets, apply now. And then we've got Ascent in Miami, and then we've got, of course, Sam Silverman's event in Tampa, fully funded, which will be very fun. And then also be going to Hunter's event as well in October. So I'll be going that solo, but it is kind of interesting as we have evolved as a firm, and there's been a lot of great, I would say, growth of late, and changes within the firm, like the new acquisition, or the new hires, I should say, on top of new deals in our pipeline and whatnot. That's very exciting. But what's also happened is a transformation of kind of my job and my role and what you're doing. So just on my end, it's funny. People are like, oh, where's Rob? Because usually we're always together. We're kind of running and gunning and whatnot. And it's been a lot of fun to do that. But I'm starting to get the sense that your position and your role doing that moving forward is probably no more, with very rare exceptions. Perhaps you'll go to, IMN Dana or Laguna Beach if you really want to, but you'll probably going to NMHC, of course. Maybe if it's in Phoenix, and definitely be going to Race Fest every year, which hopefully you do selfishly, and then we can do our, maybe annual Sedona trip following that, which could be fun. But outside of maybe two events, maybe BEC as well, you're probably not going to any of these events moving forward, and it'll just be my job to spearhead that, indefinitely, which is a lot of fun. So that's kind of the fun evolution that I get to do now, which is kind of going out and being really the new person to kind of gatekeep and create the new equity relationships, which you've basically been the dominant person doing that throughout the process. Now it's funny, I think over the last year, kind of started to notice happening. I would say maybe really around March or April, where I would start talking to people and they didn't really talk to you as much. And now there's a lot of people that you probably don't even know are raising for our deals that I'm fully kind of spearheading now, as well, of course, as Dasha doing the onboarding process and, filling in Brad to ask some questions. But it is cool to see that happen in real time. And it's happened, it didn't happen overnight, but it felt like it happened overnight.
Well, we try to move fast here, and we were moving in that direction from a nice to have, from like a luxury standpoint, right? It was about, okay, well, how do I free up my time and refocus and whatnot? But now it's really out of a necessity. So obviously we all know that necessity is the mother of all invention. And the reason why it's a necessity, as you alluded to, is because I've taken over as the de facto COO of the company. And so I run all operations now, and I'm overseeing accounting, I'm overseeing property management, asset management. Like you mentioned, we just hired 2 new asset managers that I actually flew back from Houston to New York for the week to be in the office all week with the new asset managers. So we've been having an awesome week. I've been staying and working late here, which is obviously much more of a vibe than just working until midnight at my apartment in Houston.
Corporate suite.
At the corporate suite in Houston. So yeah, it's fun to be here in the conference room, and it's dark. And we're strategizing and getting work done and stuff. So
is it a little bit more dynamic in New York than Houston?
Of course, of course. Especially our office. Our office it's filling up. We're starting to get more guests, starting to get more people. There's more happening. So I'm super excited to see this come together, and this is the right time for it, right? The timing's right, and we're making so many exciting changes right now that I'm looking forward to sharing more as they develop.
So on the operations side, let's just kind of break down kind of some of the shifts, right? So Kent has really now been able to spearhead some really, really unique and creative structures that, of course, if you are on our distribution list, if you've been following us, you probably can read through the tea leaves what we're doing a bit. But he's kind of, I would say, more now. Of course, he's on the asset management side of things. He's kind of got his hands in every cookie jar of the firm of you, as one could say. You, of course, are similarly hands in every cookie jar, but he's now really, I would say, mostly on strategy. I would say strategy and creating millions of dollars on opportunities in unique ways, whether it be unique structures, abatements, light tech strategies, you name it, he's doing it, right? Similarly, now you have kind of stepped into some of those positions and you're learning a lot really quickly. And now myself, Brad are on kind of the equity and equity side of things, as well as Dasha. You kind of are slightly in that. But we're kind of on that side of things now. So now you're in the operations and kind of key functions to the business to keep things going. So with that said, what has been rewarding to you and what has been draining to you? What's the process been like?
Yeah, it feels like like you said, I'm learning a lot, and there's a huge growth opportunity for me as a business person, as a manager, as a leader, because while we haven't necessarily grown as a company, but my role has grown so much because instead of having layers of managers in between myself and the on-site teams, I've cut away these layers and flattened our organization substantially. And what that does is, yes, it saves on cost because you have less layers of management overhead, but more importantly, it brings us closer to the action. And that's what's really important, because in any business, the people that are on the front lines, if you will, and that doesn't mean just property management, just in literally any business, right? The people that are on the ground, they, on the one hand, make the least amount of money, but they know the most, and they actually make the biggest impact. So that's kind of an unfortunate reality about business, because people think if they're kind of sitting up at the top of a pyramid and make the most money, they think they know best, and they think they should tell everyone what to do. But the reality is the people on the ground, in our case, the on-site teams, they're the ones that actually make things happen every single day. They're the ones that put smiles on our tenants' faces. They bring new tenants in the door, and so on and so forth, right? So they're the ones that make the magic happen, and we brought ourselves close to them. I mean, I'm on the phone with managers, with maintenance guys all day long now, which on the one hand is great, and I'm learning a lot, but on the other hand, obviously that's not a good thing. That's not a sustainable thing. It's not something that I actually should be doing, right? So in order to actually cut away the layers of bureaucracy, okay, great, that's step one, but step two is how do you rebuild? And so the way that we're rebuilding is with the new asset managers that we're bringing in, that new org chart that we're putting in place, so that way we can be nimble, but still not let things slip through the cracks and actually manage things effectively. So for me, it's just the growth and responsibility, because now when I speak as a leader, I'm not just talking to 10 people here in New York, I'm talking to 100-person organization. So that means I have to really be on my game, and I have to know my audience and adjust who I'm, how I'm speaking depending on who I'm speaking with, and make sure that I'm connecting. It's great. It's really cool. And one thing I'll add is also, as you know, I'm not a social person. You can absolutely say that. And my personality test, which I want to spend some time talking about, culture index here as well.
Did you get my results back?
No, I asked for them. It's probably in my inbox now. But
wish you could refresh your computer and pause it real quick, because I'm dying to know.
I know.
Maybe we'll do a bonus at the end. We'll have you cut away.
Yeah, we'll see. So my personality trait, shows up. I'm like a 2 out of 10 in sociability. So what does that mean? That means I'm an introvert. That means I like to be alone. I like to think alone. I don't get energy from being social if it's forced, right? And so this culture index test, I'm super excited about. I want to share more information about it on the pod and with you. But it shows kind of who you are as a person, and then how you have to act, and how you believe that you need to adapt for your job. And so you can see on mine, I'm a 2 out of 10 sociability, but for work, my socialness goes to an 8, right? So that strains me because I'm not doing what's comfortable for me, right? And that's fine. I mean, I'm not complaining, but it's just things that you want to pay attention to. And it's a really important thing, because you don't just hire great people, you have to hire great people for the right spots. So with the culture index stuff that we'll be rolling out, doing formal training and all that stuff, and we're going to embed this culture index throughout our organization. From every single person that applies for a job, they're going to take that survey. And then what we do is, before we even post the job, we're going to build out our ideal personality chart for that job. So then as we're screening applicants, all we do, before we even look at a resume, we just look, how does their personality chart line up to our ideal one? And then we can kind of go from there. So that's a super cool screener. And I'm going to obviously learn a lot more about this as we come. The guy, Dave, who I had the call with from Culture Index, he totally won me over yesterday. It was an amazing call. He's going to come and do a workshop in the office in August with a lot of people from the team, like all the asset managers, Kent and Dosh, are people that do a lot of hiring and managing. No, you don't.
Thank God.
You don't do much hiring and managing.
No, I love it. I want to be. It's so funny.
You stay away.
Well, it's so funny, and I'm wired a little bit particularly. It's probably why I was in the 4 more businesses than before, where I'm kind of on my own island. I'm the only remote employee, so I'm still kind of on my own island. I'm a little bit of a weird cat because I'm very social, but I also don't want anyone to disrupt me during my workday. Then, of course, I'm the one who's really
disrupting everyone else.
When I need something, I blow up someone's phone because I'm very one-track minded. I'm just a certain type of way. But there's also a good thing, because if I'm around someone, I know that I'm going to get distracted easily, and therefore I'm going to distract someone else very easily.
That's true.
So it serves me, and I think everyone else around me, to get everyone's max productivity, for me to be probably here in slightly sparing stints per se.
It's good. I mean, stints are great. This Dave guy from Culture Index.
Yeah, let's talk about that. Break it down.
You know what? It might actually be great for you to be here, because when he comes to the office in August, we should definitely do a podcast.
When is he coming, by the way? Because I will be in New York at the back end of August.
No, it's 7th and 8th.
I think I'll be in Oregon, but that's neither here nor there.
Well, we could do a podcast with him another time.
Yeah, fair enough. Yeah. So what was the reasoning behind bringing in someone like this? Because we've done, I think, disc tests before, which of course I scored exactly how you thought I would score. So I'm sure I'll score similarly on this next test. But what's the why behind this thought process here? And I'm curious to know, because you read all these business books, you are really intentional and thoughtful about stuff like this. So to break it down would be very interesting.
Yeah, like you said, there's a lot of personality tests out there. DISC, Myers-Briggs, etc. The problem that I've seen, and what hasn't resonated with me on a lot of those, is that they take a long time. It's like 10 to 40 minutes. And if you want something that you're going to roll out and scale, you're not going to get compliance on something that's 40 minutes. So Culture Index, I liked that it was fairly straightforward. You took the test yesterday. It probably took you 8 minutes at the most.
15 because I'm a slow reader.
Yeah, so it's very manageable. It's something that if you ask an applicant to do, they will most likely comply. And if they don't,
it's all you need to know.
That's a great screener
Correct.
right there.
Yeah.
So basically the impetus here, and this was recommended to us by our consultant, who's a former COO of various 10,000 plus unit multifamily management companies. So I'm working very closely with this consultant to help roll out the initiatives and changes at the management level that I'm looking to make. And so she recommended culture index, and rather than just hiring based on good top grading principles, which is I spoke about before, top grading. I'm actually rereading the book right now, but that's a lot of intuition at the end of the day. You hop on a Zoom call, or I've been doing a lot of FaceTimes with people, and I'm just feeling them out. And I think I have a good read on people, and I ask good questions, and then I obviously call the references and then ask the references. And at the end of the day, it's kind of just a guess. But whatever we can do to more systematize this process and give us an advantage, we absolutely need it. Hiring is, right now, for me, like you talk about single track mind, right now I need to be a single track mind. Like the only thing I need to be thinking about is hiring a talent. And that's actually really crazy to think about, because when you really think about it, that's the only thing that a CEO needs to do. That's the most important thing, because if you hire the right people, everything works out, everything falls into place. So it's almost like this is the only thing I need to think about, and that's it. It never has to change. But right now it's an emergency because, just to be honest with you and everyone, I've fired a lot of people. And I'm resetting the bar as far as what and who we're looking for. And that's great and all, and it's great. Oh, you fired someone today, good for you. Well, guess what? The show must go on, and you have to fill that position. So what does that mean? That means I'm up all day and all night reading resumes, scheduling interviews. I was on the phone until 9 o'clock with a potential manager last night, and you just got to keep it cranking. So that's really where I'm at right now.
Yeah, it's a situation that it's funny. I think I get asked every now and then, so when are you going to start your own thing? And I'm like, and go through the hiring and firing of things. It's like, I don't think you realize, like, if you get in with a firm early enough and that firm's doing well and you do well there, you'll be comped handsomely, and you don't have to deal with any of the nonsense that you're going through right now. I think I've told you this all the time. It's like, I don't have aspirations for that. Maybe that gives me a little less leverage if I'm negotiating and trying to get a raise at some point, perhaps, but it's truly my intention that I don't have a desire to do that, because I don't want to do any of that. I want to be very specialized in what I do on my day-to-day. I want to have, I don't really, I think a work-life balance, it's overrated. I'm not about having that right now, but in 20 years from now or 10 years from now, I might actually value that a lot more, right? And I'm not looking for that by any means right now. I will have a very unbalanced life for today to have a unbalanced life on the other end of the spectrum for the latter half of my life, right? But I think people ask me that all the time, and I'm like, you are high if you think you're going to create a company like this and deal with all the stress and risk associated. It's nuts. So I think people really don't understand on the surface. It sounds cooler than what it actually may be. And it's funny, this is a perfect segue into something I want to talk about, which is kind of careers in the space that we're in for real estate, right? So I had a really interesting discussion last night in Rhode Island, and it was just about, do you want to be the guy who goes from job to job to job, or do you want to stay at one firm and actually have a career? And I think we were actually ironically talking about this too not too long ago, where it's like, you could have a career if you stay at one place, but if you go from place to place to place, you're never going to be long enough to probably see the upside in the deals and the promote, if you call it, however you're structured, the bonuses is that you're just kind of a mercenary just to make a little bit more of a dollar here, a dollar there, but you're not going to get probably carry or anything like that. Or you could bounce around from spot to spot, or you could be at a company for a while, leave, take the risk, and then come back to needing a job, and then all of a sudden you're looking around and you've got a worse job than one you had before, which I thought it was very interesting that some guy was kind of breaking it down. He was at some banks, and then he basically started syndicating, and he was actually syndicating deals in all places but San Francisco and Los Angeles and whatnot. So what he was doing in Rhode Island, I don't know, but it was a very interesting thought, and I've had this thought before, and I think I was telling Joe, our new hire, which is a University of Arizona, otherwise known as the Harvard of the Southwest, who just got brought onto the team. We were talking about this. He's like, yeah, it sounds like really great, like you're really passionate. It's really cool to hear that. I'm like, and he's like, that sounds like a really cool idea. I'm like, no. It's the fact that all I want to do is work at Lone Star. I don't want to have any dreams to work anywhere else, because all this would be for nothing. Because if I work here and work my butt off for something and it's not compounding in a direction, working towards a bigger goal, then that to me is a waste of time. And if I don't feel like I want to be here 5 years, well, then I might as well leave right now, because I don't want to ever spend my time in anything that's not compounding and building for something better.
Yeah, and I would say that's a fantastic mindset, and it's obviously a business owner's dream to have people with your mindset on the team. So I think that's super valuable, and I can confidently say that there's multiple people that have that exact mindset that you have, which is amazing, right? And that definitely gives us a competitive edge and helps secure our future. It helps make sure that we're all going to be successful together, because it obviously requires a team. You can't do it alone, and if you actually are acting like a team and not being selfish, then it's more likely to succeed, right? So that's a really fundamental principle that I'm trying to instill throughout the company. It's not enough, in my opinion, that just you have that feeling and that Dasha's bought in, Brad's bought in, and Jason's bought in, etc. It needs to be all the way to the leasing agents, to the maintenance teams, to the community managers. That's my dream. My goal is to have people top to bottom thinking with an ownership mindset, just like you the way that you think is as if you own the company. If we can get
I own a piece in every single deal. So, you know what I mean? Like, these are deals that my net worth's tied into directly. So,
of course,
I mean, ipso facto, that's the way it works, right?
Right. And so I was on the phone with a potential manager, because we're buying a new deal, looking for a new manager, and I explained to her that hey, she was saying one day she wants to get enough experience and learn, and she wants to become a regional manager, and that's many community managers, which means that they're the manager at the property. They manage the property. Many of them have aspirations to become regional managers, because that's the next logical step. It's, hey, you did a great job managing this property. Well, we're going to promote you to now you manage a portfolio. Now you manage 5, 6, 10 deals, and you oversee the community managers at each one. And that's a promotion for sure, but then it takes you a step away from actually the property operations and stuff. So anyway, in my opinion, the regional manager role is a bit controversial, because again, it can kind of be viewed as like a middle manager cog rather than someone who's driving value. So anyway, I just told her straight up, I said, hey, to be honest with you, our company doesn't have regional managers anymore. So the way that it would work is we would expect you to be at a regional manager level, but you're a community manager and you work directly with the asset management team and with the ownership team, and we want you to act and think like an owner and one day be an owner. And she was like, oh wow, be an owner, like that sounds really great, like that really resonates. So that's some other things that I want to roll out in due time, and obviously screening with that. And like you say that and you want to see how do they react, because some people might go, I'm just really looking for a paycheck, I want to clock in, clock out, which that's fair. I'm not going to hate on that. Go ahead and find somewhere else to do that. But
you want buy-in ultimately.
You want buy-in.
Yeah.
Well,
we've talked about this too. It's like eventually I'd like to be a partner at the firm, or something like that, where it's like, or I guess, I don't know if it'd be managing director or something like that, and this is in due time. This is not today or tomorrow, but a partner, maybe it's a certain amount of buy-in associated with, dollars in deals. Maybe it's a 10-year status.
I would sell you 1% of the company for $5 million.
Perfect. I'll have my dad cut me a check. That's perfect. Yeah, because my dad's invested in all of our deals according to TikTok. It's great.
According to TikTok, yes, you have $100 million coming your way.
Right, precisely. Well, that would be really nice. But if I did have $100 million come my way, I'd probably not be in this room.
According to TikTok, I'm the most handsome man on the internet.
That's true. Well, you know what? There's some truth to that statement for sure, without a doubt.
I'll take it.
Yeah. So speaking of careers and whatnot, though, it is just interesting that guy was saying that, because we have talked about this before, and you definitely see a lot of people that bounce around, and it's, I think to a certain extent, yes, you need a job to get to the next job for sure, and not everyone ends up in the situation they want to be in long term. But I just do think, and I hope this is not an attack on anyone who's super young, think, oh, well, I've been in all these spots, but I've seen a lot of people go through that tech sales wave where they're at a company for 6 months and there's a new latest and greatest shiny object and product, that's that they want to do, but that's not really a career. And I think if you're sub 30, and I'm about to turn 30 literally a week on the dot, funny enough, but if you're sub 30, this definitely applies to you as much. But if you're kind of the person that's always still floating after 30, that's problematic, and that's probably not a good green flag and something to strive for.
Yeah, I mean, every single resume, and I've looked at hundreds in the last month, every single resume I'm screening for obviously relevant experience, but then also, are they jumping around? Did they have at least one spot that they had tenure at? So yeah, I mean, you're totally right. I think whether it's true or not, obviously you want to get an answer. And, like today I was asking someone, hey, so why did you leave that job? And then why are you now looking to leave this one? Right? I need to know every step. I need to know. I need to
also,
understand.
you hear like what their answer is. It's like, oh, well, sometimes it's not that they left. It's what they said and how they handled the question, I imagine, too, is what you're kind of looking for.
Yeah, and then also I want to speak to their supervisor. Right? I want to know if they're, what's actually surprising to me is I would think that I would hear more no's or pushback, like, hey, I actually don't feel comfortable connecting you with my supervisor because I don't want them to know I'm leaving. But I actually haven't heard that almost at all. People are like, oh yeah, I'll connect you. It's fine. Oh yeah, no problem. That's easy. And then like yesterday, I was talking to a manager, and then she goes, oh yeah, no problem. Like I'll connect you right now. And then 5 minutes later, I get a phone call from her supervisor, and she was like, oh yeah, she's great. You're not gonna have any problems with her. Piece of cake, whatever. Like, I mean, whether it's true or not, I don't know. But
it's reassuring that
the point is, like, phone call right away, someone advocating for her. Obviously, maybe it was fake, right? This morning I woke up. Maybe that's why I woke up at 5:30 this morning in a panic, because I woke up and I was like, what if that wasn't her supervisor, and what if I'm being lied to?
Well, you probably are all the time, but if they perform, then you will never know. So let's hope they perform. But if you go what you're going through right now, it's hard to have a higher hit rate, and I don't think you're hiring from the best talent pool in the country, aka Menlo Park. So unfortunately, you can't watch people for several years before making a hire all the time, like myself, or obviously Dasha, and then Brad was kind of quasi like that, considering we've known the family and whatnot from there, and that's kind of who I think about as an interesting kind of caveat as to you had a very direct look into that, and I think all those hires worked out pretty nicely for you.
Yeah, I mean, we'll see as time goes on, but I'd like to think that I have an above average ability when it comes to hiring, but I'm confident that if I set my mind to it and I train and practice and we use the culture index stuff, I know for a fact that I'll be I don't know, I mean,
top tier hirer.
I should say top 1%, but if I could be a top 1% hirer, then sky's the limit for us, and we'll be the best multifamily sponsor in the world.
Well, moreover, too, you're only going to get better as time goes on. You'll know what to look for. You'll have kind of personal beliefs, not, maybe theories or, practices other people have kind of, told you to think. You'll have your own philosophy and hiring style. You just got to go through the process, here and there. Another thing I talk about was cycles. So for there to be true alpha, for there to be true outsized returns, you only make money when people are going down like this, when you're buying here, not when it's going like this, right? Typically speaking. So I had another conversation late last night, just, smoking cigars, which there was a nice guy, hand rolling cigars. It was pretty cool. And there's also like full-size lobsters, which was actually pretty gangster. So that was pretty cool. I failed to mention that earlier. But we were having cigar talk, and someone's like, cycles are so important for what's going on. It's like, I know a lot of people right now that are complaining about the rates being right now. These are guys in their 60s and 70s and whatnot that are complaining. And he's like, don't you realize that you got rich off times like this, and your career is made off times like this? Maybe they're just speaking their own book, or they're just getting older and crustier, which probably will happen to you and me at some point as well. It's kind of already happened to me regardless. But it was a very interesting thought that, the alpha comes from when things are going down and sideways, and when deals are hard to kind of size up.
Yeah, I mean, I feel like we've talked about cycles a ton on this podcast, and it's the reason why is not because we're obsessed with cycles, but because we're seeing it happen before our eyes.
And it's unique because this is the first one in economic downturn that we're kind of in right now that we're going to experience while as, in the workforce per se.
Totally. Yeah. And the last true one was 2008. And I don't think this one's going to be nearly as severe. but and 2020 didn't really count because it was so short-lived. And then
there's a 2017, which there was some rate changing as well, but
yeah, no, that there was a little mini fake out there, but we're seeing it happen before our eyes. And the thing that's funny about real estate and cycles is they are slow. Real estate's slow, so the opportunity and the phenomenon happens over time. So that's the funny thing, because we keep talking about it, but it's because we keep seeing it just slowly unfold, and it's a really long movie. Like, kind of when rates started running up, everyone knew that people were going to get foreclosed on and that there was going to be distress. But look how long it's taking, right? There's been some foreclosures, there is some distress, but it's only just begun, and we're 2 years into the hiking cycle. So it is just a slow moving animal. And that's why, on the one hand, it is kind of like we're talking about it a lot, but on the other hand, it gives us a big window of opportunity to take advantage. So that's exactly what we're doing right now.
Yeah, and another thing on that kind of spectrum is it's really hard to make deals pencil today, right? But has there really ever been a time where it's been such a how could you not no-brainer situation with the rare exception of a couple quick blips in time, I should say, where it's like, okay, well, in 2021 you could lock a deal up, the cap rate was here, and then the rates were going down. Outside of like these rare market anomalies, I feel like every time you buy, you're always stretching, you're always suspending belief, and guess what? There's no free lunch. You're always paying the most. So it's like to get a deal done right now, it's no different than really any other times, unless treasuries go crazy on us while we're in escrow, which could happen any moment, which we experienced about a year ago on 1001 Ross, but which is kind of funny because we're filming that video a year ago, basically on the day. I digress though, but I think it's interesting to think about. It's never easy to pencil a deal, and it's always going to be competitive. So you might as well buy. And it's funny, one of the consistent themes I got at this event was like, oh, it's so great that you're still active. And a lot of people see that we, do our deal marketing. They know the machine that we've got going on, and they're really impressed by that. But it's like, why would you not buy right now? Like, if you were buying before, you're silly. So like, is your tail just between your legs? Are you giving up? Like, you're not trying hard anymore because the environment's different. Like, you just got to press through to make a deal work. But just found it very interesting that people are not buying right now, and just also the thought process I really want to instill to everyone is it's always going to be tight. It's never going to feel easy, and it's never going to be a no-brainer to buy real estate that we're looking to acquire.
No, absolutely not. Life's just not that easy. It's not like a positively levered, below replacement cost, high growth market, newer quality asset is just going to show up and you're going to be able to buy that, right? There's one of those things is just not going to happen because you're going to get so many bidders, the price is going to bid up, and it's going to bid up to negative leverage or to above replacement cost, or one of those things is not going to be true. So if you just want a no-brainer deal, it's just they usually don't exist. So everything you said is totally right. And I think the interesting thing about the investment business, and this goes to some of the topics that were covered in the Walker podcast with
great segue.
Yeah, Willie Walker and Peter Linneman, which that's a must watch, must listen. They do that quarterly, and Peter Linneman is very knowledgeable. I'd say he's a bit of a bull, right? So he's always positive, always optimistic. But anyway, they talked about this concept, which the investment business, right? People are paid to invest other people's money, and they're paid to take risk. However, they're not paid to take today's risk, right? Most of the shops are on the sidelines today, and it's kind of an interesting situation because you do have some of the smartest people in the world working in this business. I mean, I don't know if you saw, but obviously it's intern season, right? So you're walking around New York and you're seeing there's a bunch of interns running around in their poorly fitted suits and whatnot. But Blackstone had, I think, 60,000 applicants for their starting analysts this year, and they started 167 of them. 60,000, 167. So my point is you have some of the smartest people in the world working in the investment management space.
And the only people who got it probably had their dad working there.
Nepotism for sure. So yeah, let me just set this up because it's a little bit of a zinger. You have some of the smartest people in the world working in the investment management business doing some pretty dumb things, right? And all this smartness is just going towards herd mentality and just looking around and saying who's doing what, because I don't want to look like an idiot and I don't want to get fired and I don't want to make a bad deal. But even more so than I don't want to do a bad deal, I don't want to do a bad deal that other people think is a bad deal, right? Who is getting fired for investing into bridge loan multifamily deals in 2021, right? I mean, I'm sure some people got fired over that.
But some people just lost their job because maybe they went under.
Right.
Per se, yeah.
Right. But the reality is everyone made that decision largely, and so everyone's in that boat. So people aren't like, oh, you're such an idiot for doing that. Everyone's kind of like, yeah, well, we all kind of got caught up in that.
Well, the ironic thing is the smart thing to do in retrospect would be to have done 10-year agency on a deal like that, sold the deal right now in a loan assumption with about a 5-year tarmac on it, got an outsized sale for comps right now because you could sell the assumption, and now you should probably be doing bridge and floating right now as we speak, right? Which is the irony to your point.
It's the opposite, right? People who just now got burned by a bridge loan deal gone bad, they would look at a new deal today with a bridge loan and go, oh no, I'm not doing that. Bridge loans are bad. I lost money on a bridge loan deal. But like you said, arguably today there could be a great opportunity to do with a bridge loan, right? It just depends. It certainly wasn't a good time to do it 2 years ago. So anyway, that's kind of the unfortunate thing about the more so institutional space, because there's that herd mentality and a lot of them are on the sidelines for the reasons I mentioned.
Very interesting. And it's funny, all these institutions now are claiming they're still in the game, which they're really not for the most part. They're looking for, unicorns out there, which everyone else is. And I've also noticed that they're kind of going to and veering to other commercial real estate sectors in the moment place, like cold storage, industrial, things of that nature that are a little bit more different than, I guess, multifamily real estate or office per se. That is, I guess, just a change in pattern and whatnot. So I thought that was kind of interesting that they're getting a little bit unique and outside the box there. But, I'd be curious to know what deals are truly getting done right now, under what structure, because all the groups before were giving out pref, but are they really giving out common equity right now? It's interesting.
Yeah, I'm sure obviously it's happening, but they're being selective, and their way of saying no is basically having an unreasonably high bar. But another point from Peter Linneman and that Walker webcast was the idea that we're in the investment management business, so we get paid to take risk and invest other people's money. But so just think about it. If you're in a market where your job is to put out money and it's just simple supply and demand, if right now there's less people doing it and you can do it, what does that mean for you? It means that you should probably get a better deal. You get more rewarded for that because there's less competition. What's going to happen? Like right now, a lot of groups on the sideline, because I was laughing the other day because you got feedback from a group saying like, oh, if we were to underwrite that deal, we would use a 6.5 cap on exit. 6.5 cap? What do you think is going to happen to cap rates in 6, 12, 18, 24 months from now when everyone who's on the sidelines being scared plows back into the market?
Also, you were underwriting those deals at like 4.5 caps 2 years ago.
When you should have been underwriting them to 6.5.
Yeah, so now you're, the noble one and the wise one. I am troubled to buy kind of what they're selling.
No, it doesn't make sense, but it's
the game.
It's the game. It's the herd mentality. It's what makes this business so fascinating, because you're not just trying to do the smart thing from a logical standpoint. There's also a psychological standpoint as well.
Yeah, well, the component is, hey, is going out on a limb really worth my job security and my career, or am I just going to kind of stay and follow the herd? Am I going to not be uber contrarian and maybe save that bull in the future? So it's very interesting. But that's kind of the love that I've been kind of the love that I've been re-established with, pertaining to a lot of our fund managers, capital allocators who we can send them a deal and they'll say yes tomorrow. And frankly, that nimble can-do attitude, that wanting to do deals, that thirst for deals, is awesome. Now, no one's perfect. We all got our set of, issues per se on some deals. Maybe they ask silly questions or fully comprehend, the risk associated. But God bless them, they say yes right away, and they're generally speaking very easy to work with. So it's been really fun to kind of fall back in love with those people and also kind of like see what's going on with the institutional side. But I do think, call it in a year's time once we're closer to the bottom, if we're not there already right now, they will obviously, change their standards. And, I do think in a couple of years, rent growth will for sure be better. And we'll kind of get into that. So let's kind of just break down real quick some of the themes from the Walker podcast that you said. So supply, if you want to get into that, would be interesting. And then maybe a couple other tidbits that you heard, and I'll get into what I heard.
Well, it's funny because what you said was, hey, maybe we're going to hit a bottom in a year, and then that's when people would want to get in. But that's the opposite of how it works. Because the very definition of a bottom is the peak dearth of capital. Because what creates a bottom? It's when all the oxygen, aka capital or liquidity, is sucked out of the room, right? So the definition of the bottom is peak when everyone wants to be out. So I feel like the bottom, it depends exactly what you're talking about, but at least from a sentiment standpoint, I think that has happened already. I don't know, you're talking to investors every single day, so you probably have a better.
We're in the middle of it from a liquidity perspective.
Feel like it's worse than December.
Yeah. I think people are more excited in December because it's a new year.
And they were anticipating NMHC, and they're deals are gonna come out.
Also, the other canary on that end, and the other difference from beginning of the year to now is everyone thought we're gonna have 2 rate cuts at this point, or a rate cut at least. They were anticipating 3 to start, right? So maybe it would have been 1 in Q2, 1 in Q3, and of course probably 1 in Q2. And maybe 2 in Q3 promptly right before an election, right? Or maybe, Q2, 3, and 4. But right now, we might only get 1. We might not get any. So I think people are really starting to feel the pain. The other thing as well is people are all more optimistic then, but what we're starting to see now are, extensions, 1+1s, workouts, foreclosures. So we're all kind of starting to see that.
Yeah, it's a really good point, and I think you're right. From an anticipation standpoint, people totally. I remember I was at a conference, I think it was in November, December in Miami, and I remember our good friend Andrea, he asked from the crowd and he said, when do you think they will cut rates? When do you think they'll be the first rate cut? And I wasn't very confident. I was kind of like, just cocky, confident with the mic, and I was like, May. And I kind of thought that was going to be right. And as May approached it, like there were some signals and stuff, and now, we're in June and there wasn't a cut. And like you said, there may only be 1 cut this year, or at least more importantly, that's what people think. And what people think is what matters. It's not the news, it's the rumor, right? The rumor is what affects the market. The news, it's already baked in.
Well, and if we started at 3, now it's 1, it might be none.
Well, what I'll tell you I think is actually going to happen is probably 2 or 3. Because what happens, like I talked about on last week's podcast.
I actually think it's going to be, at this point, my guess is there's going to be no rate cuts. Although I don't believe that, I'd rather just mentally forecast that to be the case.
In order for the Fed to cut rates, they have to make you believe they're not going to cut rates. It's such a messed up game, but
it's a deep fake.
It's a deep fake. They need the whole market to believe they're not going to cut, because what that does is that without even them doing anything, that legitimately influences market activity and will actually tighten financial conditions. Because the second that if they signal that there's going to be cuts and people start believing there's going to be cuts, financial conditions are going to ease already, and that's going to be counterproductive to their goal. Now, a whole separate topic is their goal valid? Is there merit behind their goal, which is bringing down inflation to 2%, let's say? I don't think there's merit to that goal, because I think the way that they're analyzing the data is incorrect. And that's what, that's not my own idea. That's from the Walker webcast and Peter Linneman talking about the poor attribution or poor methodology for calculating shelter. As you know, 75% of the shelter component of CPI, of which CPI is like 30% shelter or something. The way that they calculate that is they call people who own their home.
And ask what they'd rent it for.
Yeah, how much would you rent your house for?
It's the most antiquated process. Like they're like a professional agent and or have consulted, a renter agent or something of that nature to figure that out. The answer is, in most markets right now, from a rental perspective, rents are softening.
Correct.
And depending on where they are, they're getting really soft. And what was an interesting conversation at the conference as well was Austin, which is going through its own set of issues right now. But there's clearly a lot of issues going on with a lot of supply coming online and things of that nature. And Phoenix is also, my dear, sweet, precious Phoenix is not so hot right now either. So we were just talking about that, but I don't think anyone's really, getting increases on their rent. I know someone that you went through and talked with. You can talk about that. Me. Yeah. Well, my mortgage just went up, but because I just bought my new house. But you went through your situation where they try to raise rents on you, and you very let them know that they were silly and stupid and wrong, and you presented to them a comparable set, and they, rescinded. I'm sure you could have even negotiated.
They never should have rented the apartment to me because they should have known that I was going to do rent comps on them.
Yeah, they should have known that you were going to do your homework.
I did the whole rent comp.
It's crazy. You wouldn't think that someone who could afford to live where you live would do their homework, right?
Yeah, no, it's fair. I mean, I think at the end of the day, right, I'm not trying to pay less rent than I should.
Yeah.
I'm happy to pay whatever the apartment is worth in the market.
Two sides are interesting there because thinking about this, right, and this is just such an interesting story and a thought process to go through. You live here and they want you to pay this. If you were to move out where you were in the economy right now in the market, you would have to spend dollars to move somewhere else, to live somewhere nicer, less expensive, wherever it may be, to fit your criteria, right? On their end, to try to get a rent increase, if let's say that backfired on them, it's going to take minimum 1 month to get everything ready to be re-rented, and maybe more than 1 month to even achieve the same price that you would get today. So they might be out 2 months rent. That is a big net loss to them, even if they can increase what they're trying to increase to you.
Yeah, for sure. And when I'm not sure how many apartment units my landlord owns. I think she's an investor who owns multiple luxury apartments in the city. That's pretty sweet.
Yeah, that's a cool niche.
But still, so for her, it's not like, and maybe I'm wrong about her, but let's just say she only owns and manages a few of these rentals, right? For her, each individual unit is really substantial. It's kind of like the whole theory of single family versus multifamily that you kind of learn about when you first get in the business. If you have a single family home and it's vacant, your occupancy is 0. If it's occupied, it's 100, right? Well, okay, so now if you're multifamily and you have 100 units, if you have a one vacancy pop up, that's just 1%. So in multifamily, you kind of shrug off a move out because you're like, it's just 1% and I'll turn the unit and I'll rent it out again. It is what it is. So I feel like there's almost, and this is a really interesting segue, it's almost an unhealthy culture that many people have in multifamily of being a bit blasé about move outs. Because if you think about like the story you just painted here, on an individual unit basis, if I were to move out, she would have to, I'm keeping the apartment in great shape, but she would have to spend some money to clean it up and
she
get
may
it prepared.
Not get as good as tenant as you on the next side. She's accruing a substantial amount of risk by that leaving.
The guy before me was like some crypto guy or something. He
bought
a Ferrari and stuff, and then boom, before you know, he couldn't pay the rent. Huh. And I was like, well, I assure you, I'm going to be a great tenant here. I'm going to pay my rent. I'm going to stay for a while. And it's funny because obviously everyone walks in the door and says that, and that's true for me as a tenant. It's also true for me as a landlord evaluating our prospective tenants. And no one is trying, or nobody should be trying to game the system or take advantage of anything. It's just simple market forces, like you said, and also it's a game of chicken. Like if I'm willing to move out and incur the cost, because I have costs associated with moving, but the landlord has costs.
It's also another thing to think about too. Is I just went through. This year's been brutal for me. I've been gone more days than I've been home. I have been traveling so much, and the big kind of theme for this year, and I'm really looking forward to just getting through these next couple of trips because then I'm going to be a lot more settled per se. But it's mindshare, and the thought of mindshare really creeping into the equation where if you did that, maybe you could trade up a location, pay the same price, whatever it may be, but then you're spending a couple weeks of your life to find a new place, to live somewhere new, to coordinate movers, to do this, to do that. That is, moving takes up at least a month of your life. It's brutal, it sucks. So to avoid that is really nice, and to take that off your mind share.
Yeah, I wanted to renew the lease. I mean, you were so right when you were like, hey, you're going to be living in Texas now. Why are you renewing the lease? Just throw your stuff in storage and save a bunch of money, call it a day. And you know what? That probably is right. And I could probably finesse it. And when I do come back to New York,
Get a B&B.
I could get a, you know what? I could get a splurge, I get a nice hotel every
at
time
the
I'm
Four
back,
Seasons, yeah.
and I still would save money,
Yeah.
right? But for me, it's the mind share. It's I don't want to move. I don't want to have to deal with it. I've got bigger fish to fry. So anyway, it's an interesting thought process. But if you say this year has been brutal for you, and you say you want to worry about mind share, then I would say to you, you should just become a renter like me, because you don't have to worry about anything. If something goes wrong, it's just maintenance request.
Yeah, but unfortunately, I know the home game too well to make dollars on it, and the arbitrage and the spread of, what I can create after our good friend Teddy just got a construction quote for his house. The number, I don't think we've unpacked this yet, so I'd love to talk with you and Francis about that tonight. We're going to Sushi Nakazawa. Life's really rough for us here in Manhattan, but I'm excited about that. But there's so much money to be created there, so it's too difficult for me to not. And also, this is a very interesting topic as well that I spoke about at the conference. Not to make everything about that conference, because I seemingly am doing that on loop. It sounds like a broken record here, but it's a very interesting thought. And I saw this on Usual Whales on X, which was, states like Texas and Florida right now are going through really interesting dynamics. And I'm sure the Carolinas experience this as well. I'm not too privy to how everything works there, but those states, Texas and Florida specifically, have two crazy variable costs that are very expensive: property taxes and insurance. So insurance has been brutal. Florida's all tier one. Houston, of course, is tier one from a risk perspective. That's how insurance people underwrite it, for those who don't know. And then property taxes. In the states where there's no income tax, they're going to get you one way or another, right? Where do they get you for those two states? Property taxes. And obviously sales tax is a little bit higher in Florida. I'm not exactly positive what it's like in Texas. I can't imagine it to be too cheap, but nonetheless, they're going to get you one way or another. And a lot of home foreclosures have occurred, and also multifamily foreclosures or issues with the properties where they're like, oh my God, it might be at, break even DSCR, it might be slightly underwater, losing dollars, but there's still some equity here. This is an alligator property, meaning it's, negative. It's you need to be fed, not, giving you cash flow. I need to get the F out before it's too late, because those variable costs have gone up so much. Well, in Arizona, where I own, it's very nice. My insurance for a year is like $2,000, and my property taxes may even be less. So those variable costs are a lot more stable. So appreciation is substantially more clean. So that's why I think owning in my situation is a little bit more easy than the typical person. And also, when it's hardest to buy a deal and when rates are the worst is when you want to buy. And I would be damned if I miss out on that opportunity to buy in the neighborhood that I wanted to buy into, that I couldn't afford 2 years ago because the conforming loan limit was lower. It's raised up. So I've taken out more debt, which is funny. I think right now is a great time to take out more debt. And obviously we're buying more deals.
Yeah, I think the same dynamics apply, right, to single family. I think there is a bit of a dislocation, however, in single family versus multifamily, which is interesting. I don't know if we've talked much about this, but there is...
No, I don't think we've talked about it on this pod, at least. Some curious know where you're going with
well,
this.
I'm talking about the scarcity premium, because there's so few single family deals on the market that prices are basically being...
Regionally, though, some places are really stacking up. Like, it's a slight misnomer in some locations. Like, there's some places in Florida right now that are going crazy because I think they've gotten a lot of appreciation when rates were really low, and then the prices are high. Well, now these prices have increased. They can't afford the insurance costs, and they can't afford the property taxes now. And like property taxes...
So our price is going down then?
Well, people need to sell. So if there's more houses and more units on the market, the prices will be drove down, right, via options. But it's residential real estate is all sub-market dependent.
Of course.
More so, I would say, than in most sectors.
Well, it's more so because it's not most of the time the end user is not a financial buyer, right? They are buying a financial instrument. They're buying an asset, but
technically,
they're buying to live.
Cuspy,
yeah, but they're buying to live in it, right? So they're buying it for non-financial.
It's a liability that can appreciate.
Of course, definitely. So that's why it is more sub-market specific, because at the end of the day, when it comes to multifamily, for example, the end user is just looking for cash flow. It's just a financial instrument. So yes, we as operators, we care about the location, and we care if it's in our portfolio and where it is relative to our assets and to our people. But if you're just sitting back and just passively investing, it's like you don't care about the location, you don't care about anything. All you care about is the dollars you put in versus the dollars you get out. The same cannot be said about single family, right? Some people, they want the beach house in Newport Beach, California. Some people want the penthouse in New York, right? Like they might cost the same, but they're radically different assets, and so obviously they have their different dynamics. But what I think is a great time right now is for, like you said, maybe some sub-markets of single family, for people to really think hard about their single family holdings and to sell if they're trading at a premium.
Couldn't agree more.
Because the only reason they're trading at a premium, it's not because the U.S. consumer is richer than ever and can afford to. It's not because rates are low, because it's actually the opposite. The only reason that prices are so high where they are in single family is because of the lack of inventory.
Well, and it's also in many places due to the best debt instrument in the world, which is a 30-year mortgage, which most people right now, a large swath of the population, own their houses free and clear with no debt.
Really?
Yes.
No, I don't think so.
There is, if you look at a pie chart, not a majority, but like around 20 to 30% of homes are owned free and clear. It's okay. A very large. That's
fair.
That's not nominal by any means. And then you've got another sector of the population that've got sub 4% rates. And then,
I think Peter Lindemann said 80% of people have a rate that's less than 4%.
So basically there's 20% of the market of people like me who've got, 6.85% rate, right?
Yikes.
But it's great because guess what?
It allowed you to get in at a low basis.
100%. It allowed me to get a low basis, but the house I bought right now was trading substantially higher before. I wouldn't even be able to buy in. So I'm like, okay, whenever you get a chance, especially like that, you just buy in and you wait.
Price is permanent. Financing is temporary.
Exactly. And I'll do refinance in the future, but also when I found out the cost to do the construction project, I was absolutely giddy. As I said, everything we do at Lone Star is a value enhancement play.
So just to finish that thought, and for anyone listening, if you do own single family, I think it's something very interesting to take a look at. Can you sell that single family for a great price?
If it's a rental property and you're looking to max out your dollars,
right,
it would likely serve you to exchange, if you can, into a syndication like ours. We're going to talk our own book here, and into our multifamily opportunities where those deals are really wide.
Those deals have gotten discounted, right?
Yeah.
So if your single family is down, let's say, 5% from where you think you could have sold it at the peak, well, guess what? There's multi that you could exchange into right now that's down 30%.
Or more, depending on the situation.
If you want to get your hands dirty and get into some rougher opportunities, absolutely.
And call your parents, yeah.
Yeah. So that's an arbitrage right there. That's a really great opportunity. There was something else I wanted to say about
another thing that I look at single family is, where I'm at right now, I want to maximize my dollars. And we talked about this earlier in LSD. I alluded to it, and we won't get into the exact kind of nature of it, but stale equity, right? You don't want to have dollars that are just kind of stale. So I sold my house before and moved to my other house because I kind of looked like, okay, without me spending $100,000, which I may not even get paid on that $100,000 of work, I kind of maxed it out looking at what I know with my knowledge, which I would say is very deep and rich, that I was kind of at the close to the ceiling of what I could do without spending a ton of dollars. But the area that I'm in right now, you can spend $500,000, $1 million and get paid for it, get 20 cents back, spend $1 to get $1.30 back right now, right? So it's a unique situation where if you can get into situations where you can kind of flip and create more value, it's a smart way to do that. So if you've got a house that maybe is just a little bit stale in that regard, you're at the ceiling, there's not really much value enhancement to be done, now is a really good time to kind of reassess it. So I took some of my equity from my house proceeds, like the whole gain that I had tax-free. I moved that into Cortland Copperleaf, of course. I've got some dry powder for our next deals coming up, Grand Riviera, of course, and the deal behind that potentially, whatever that may or may not look like. And then, of course, into my house. And I also paid my car off too. So I paid off bad debt and it created more good debt.
You didn't pay off bad debt.
Yeah, well, no, that is
just
bad. Yeah, that is bad consumer debt, in my opinion.
No, it's silly. I mean, it doesn't matter either way. But
we can get into it if you want.
Yeah, no, your thought on that. Your car loan was like what, 5%?
It was 4.4.
4.4. Yeah. See, like you paid off 4.4% debt with money that cost you today 6% or more.
I understand that logically it's not right, but to eliminate a $560 bill, which is like, it was like 15 grand left, it's like, hey, just get this out of my plate. And I wanted to do it. It's 100% emotional, but also for me to underwrite and get a better note and mortgage on my house, it's more strategic there. And also, when you look at $500 from a borrowing perspective, that could be a construction loan on my house to create, $500,000 of value in excess of my $200,000 of cash put into it. So I'm thinking about the bigger picture there, and also I just don't like the idea of having a car payment. I know it's irrational. I'm not saying it's appropriate or smart. I don't love cars per se. I'm really just going all in real estate as much as I possibly can. So that was kind of the reasoning behind it.
Yeah, it's fair. I just like to give you a hard time about
I
it.
know.
But our good friend Alan Steinberg said, "We work hard so that not all of our dollars have to work hard."
Right.
Right? Which is funny because a lot of people say the saying differently, which is you need to work hard so that your dollars can work harder for you, right? And obviously that's a really good concept. You don't want to just trade your time for money. You want to build an asset, right? You want to build up wealth and then have that wealth work for you. And what does that mean? It means you invest in cash flowing investments like our multifamily deals, and then those pay you. But to Alan's point and to your point, you want to live you want to be successful and live a good life such that you don't have to put all of your money into the highest yielding investments. You can afford to maybe one day, hopefully, all of us listening to this and you and I, hopefully we can own our own homes without a mortgage. That's a dream.
I think for me, the dream is to have obviously a ton of money, paying me out, but to have a situation where your nest egg, which is a home, maybe a couple other assets that, hey, all else fails, I have no debt on this, and you can live that way, would be really nice. To not be a full mercenary with every penny that you have. And, it's like, hey, no matter what happens, I have X, Y, and Z. It's fully paid for. It's fully clear. You don't have to have any mind share associated there. And then you can be riskier in other places once you've kind of built up that nest egg. So with that said, come to our conference, come to our event if you want to hear more stuff like this, meet us in person, of course. But any final thoughts you have here today?
No.
I'm excited for Sushi Nakazawa tonight, and for Charles 2 on Sunday, and Teresi on Tuesday.
I'm really making the most of my time here.
That is 3 absolute headliners of New York restaurant scenes. For those who might want to, what are they talking about? That's like if you could see Drake, Taylor Swift, and like The Weeknd, all like in a 3-day span.
All of our listeners are, they're hip, they're in tune with the restaurant scene in New York. Right. But anyway, what I will say is, and obviously it wouldn't take a genius to guess this, but obviously now living in Houston, I obviously have such a greater appreciation for New York, and I don't miss it. I don't miss home, but I'm having a great time in Houston, honestly.
Appreciate it.
But I appreciate it. It's like, oh wow, this is why I moved here. This is why it's so special, and why I spend an egregious amount of money to live in New York versus anywhere else. And sounds kind of silly, but yeah, the restaurants have a little something to do with it.
Yeah, well, I will say this as well, on top of what you just said too. I spend now at this point, there's 3 places I'm certain of going every single year. I guess 4, somewhere in Texas for our deals, but I spend time in Phoenix, New York, and Oregon. And every single time I go back to Phoenix, New York, and Oregon, I love it that much more. I truly do. It's like every single time I re-fall in love with it. It's a comfort and familiarity. All of them are wildly different. Obviously, they couldn't be more geographically spread out. One is obviously the Southwest, one's Pacific Northwest, and one's Northeast, but all of such different flavor and different kind of spaces and kind of like, thoughts as to where I've been to enjoy them in my time in life. But I love those 3 locations, and I feel very fortunate and appreciative, I'm sure, just like you, coming back here.
For sure.
Yeah, cool. Well, with that said, we'll see you next week. Have a great rest of your day and week.